So hopefully we're live on our sites as well, YouTube and Facebook and LinkedIn. So good afternoon, everyone, wherever you are in the world, morning, evening, wherever you are. Top of the morning to you as well, Emily. So that's our new website, guys. We relaunched it yesterday. We've tidied up the top five. Sorry, we've gone for, I think we had 9 tabs here, and now we're down to 5. The bit that we look after, the analysis team, is this one here, tools and education. We've pushed through education tab. We got tools on there as well. So anything on here, we are responsible for, and we want to make it the best there is in the market. So any comments you have about our, I don't know, our traders board, our traders calculators, the tools that we offer, please let us know. Our analysis, whether you want more videos, less written stuff, the news is good enough, the calendar is good enough, all that sort of stuff. Earnings calendar, we just launched that not so long ago. Obviously, we're coming towards the end of the earnings season, but there's still some key companies reporting. Occidental, one of Mr. What's his name? Buffett's main investment. Walt Disney later on today after the market closes. AMC means after the market closes. BMO before the market opens. This is US time. Remember, this is our earnings calendar. Deutsche Telekom, also registered in the US as well. Deutsche Telekom, big German pharmaceutical company and just chemical company as well, obviously. Yeah, I say we're coming to the end of that, but that's our new website. Do have a check it out. Our analysis, as ever, is some of the best in the market, if not the best in the market. We would say that, wouldn't we? So anyway, let's crack on. So today, guys, it's all about you. It's all about live analysis. Anything you want to talk about, any markets you want to have a look at, please let me know. I hope I'm loud and clear. Emmanuel, good afternoon to you as well. What do you think about CPI data that will affect the US stock index? We'll come to that in a minute, Emmanuel. It's out in, it's been a very quiet start to the week, hasn't it? That's out in an hour and a half. Your voice is not clear enough, says Emmanuel. Okay, let me just check out the settings on this. Audio input, communication aids. So it's this new headset default. Hang on a minute, let me just. Audio input, Logitech. I don't want. No, this is the headset. Is now. Sorry, I've got Logitech camera and a Logitech headset on the moment. So that's the earphone is the 820E. This is an 820E. Yes. So, okay. Thank you for that, Emmanuel. Anybody else on YouTube think the audio is not very good? Let me know. Mohammed, 1935 for gold. We'll see. Okay, let's just go through a couple of slides first. Anybody on? There we go. Nicole's asking about CAD, Swiss, and gold. Your voice is glitching, says Sabusi. Okay. Perhaps if I'm speak a bit more slowly. Should we swap headsets? I'm getting my technician, also known as Andrea, is saying change. Use the camera audio, Andrea says. So let's have a look at that. Let's see if we can do it. Last time I just did this. Whoops. Audio from the from default. I might need to restart communications headset to your phone. So on this headset, so hopefully that might improve things. I don't know if that's any better. Anybody? Is the audio improved? Anybody? Let me just check for my colleagues over on. It got worse somehow, says Yao. Okay. Oh dear. Oh, hang on. Right. So this is the problem I've got, guys. I've got. Why isn't that showing? I'm not sharing the screen. Xiao's saying it's got worse and it's echoing, and somebody else is saying it's much better. Ew. Farzad say it's all good. Oh, right, there's more positives, I'm afraid, Xiao, than negatives. Samuel's saying it's all good as well. How about my colleagues over on? It sounds distant, says Nicole. It's worse. Oh dearie me.
What if I got a bit closer to the microphone? So some are good, some are bad. Right, we'll sort this out for next time, right? But far, sound, distance sounds, audio sounds a long way away. Okay, well, should we just crack on and I'll try and speak a bit more slowly? Guys, connection is good, but far distance. Okay, let's crack on, okay? Because there's lots to talk about, okay? Right, so let me apologise if the audio's not great. We'll fix it. We'll make sure it's okay next time. It's the first time I use this cordless headset, so let's get going. So let me just quickly run through a couple of slides, and sorry, I need to leave that on, don't I? Remember, trading is a risky business, ladies and gentlemen. Make sure you understand, the basics when you're trading with a CFD broker like HFM. So leverage, margin, the product that you're trading as well. Remember, look, different products have different margin levels, different spreads at different times in the day with some products as well. So always watch that. Make sure you understand the risks involved, because it is a risky business. You don't want to listen to me. So we'll have a quick look at the news that's coming up. Raise volume, says Nicole, and it's okay. Connection good, but okay. All right, glitching. Okay, I'll try and speak a bit more slowly. It could be dropping out. So anything, obviously, say you want to have a look at, please let me know. There's lots of you on YouTube. We'll get to you all, okay, guys. I know it's only 6 minutes past or 8 minutes past, and a lot of you are asking every time they can hear. Okay, so Xiao says it's echoing. Sorry, Xiao, but yeah, everybody else is saying it's okay. So let me just put up Emmanuel's data. So it's okay here. Right, okay, we've had a relatively quiet week. It obviously kicks off today. The big news today is the US inflation data, which is what Emmanuel's asking about at the moment. Right, so what we've had a peak in US CPI. Remember, that's Consumer Price Index. The consumer in the UK, the UK and the US in particular is king. Remember, 66% plus of the US economy is built on the consumer, so the consumer has held up relatively well. So his prices have been going up, but their prices have been going up, but they've peaked out and they're coming down. The issue, the big discussion now is whether the Fed last week did raise rates. So is this the last hike? Remember, we've raised 500 basis points in about 14 months. So from March last year, interest rates were nominally zero in the United States. They're now at 5%. To counter this big spike we've had in inflation, it was over 9%, touching 10% in June last year, and now it's down to 5.5%, or it's expected to come in at 5.5%, the headline number, the one that everybody talks about later on this afternoon. Also talk that this might come down more significantly for April, simply because of the big fall we've had in oil prices as well, and other commodity prices as well. So if that is much softer, that might add to the argument that the Fed have done enough. They were behind the curve, but they've done enough now, and they will pause, and it might even start the talk of perhaps rate hikes before the end of 2023. Personally, for what it's worth, it doesn't really matter what I think. I really cannot see that happening, certainly not until the first quarter of 2023 at the earliest. But anyway, we'll see how it comes. Simply, I've lived through many inflation spikes, and inflation hangs around. It's sticky. It's a word we've been using for 18 months, 2 years here, and it is around, and we can still see that in the services inflation part of it. The food and the goods and number has come down very significantly, but the services sector is still ticking along, and inflation there has held up. So we'll see what the detail looks about later. So this obviously could have a big impact on dollar. Dollar's been weakening recently, but has it topped out? Is the top in? Deutsche Bank this morning we're calling for the top in this big rally we've had in cable. Euros, up that 110 area. Sterling went to a year high, 126.70, 126.80 area. So we'll see what happens. Obviously, gold is, when the worry. Somebody was asking me the other day about, why is the dollar gone up and gold's gone up, and that's what happens when markets get a bit spooked. They rush to safe havens. Gold and the dollar, and particularly the Japanese yen, are both all safe haven assets, and people tend to buy those. when the worry of inflation and impending recession or potential recession comes around. So that's where we are. So it's the key piece of data this week is this inflation number out of the US. Remember, as far as the Fed's concerned, the guys and girls that are making the decisions, this is one data point, simply one data point. It is a significant one, but they're measuring, they prefer the PCE number, which comes out at the end of every month, and it was hot again last month, so they're still on their course of, they did hike last week, and they're still maintaining a bias towards that hawkish side of things. As far as the Fed's concerned, all of the central banks ripple out from there. So we'll see what happens with the Bank of England tomorrow. That's the big news tomorrow. Bank of England expects to raise rates by another 25 basis points. Big split within the MPC, the Central Monetary Policy Committee. Two members are looking to the calls for a cut a couple of meetings ago, but likely to be unchanged, arguing for an unchanged 4.25%, but the majority will sway the 25 basis points. It's how hawkish or dovish Andrew Bailey is in his press conference later on and his speech later on this week as well. He's got one immediately after the announcement this week, and then he's got a key speech next week as well. So likely to remain cautious. Remember, but again, the Bank of England also being caught out. UK now unlikely to go into a technical recession, although things are very, very tough for the average worker and the average family in the UK. The data is sort of improving, as it is in many parts of the world. The data is contradicting some, the sentiment numbers. But so the hard data, remember, is backward looking, but some of the sentiment is more forward looking. So it's that mixed scenario as ever. So you pay your money, you take your choice. But Bank of England next big event tomorrow, and then we finish the week with UK GDP. It is a quarterly number, so it's a bit more important than it has been. They now announce their GDP every month, the UK, so it's perhaps not as significant as some of the quarterly announcements, but UK GDP on Friday. And then that very important University of Michigan, the consumer sentiment number coming out on Friday as well, 63. Still relatively high, but again, you see slipping from recent highs to 63.5. Next week gets a bit busy again, as we've got... this is the monetary policy report hearings. That's Bailey and the members of the MPC in the UK reporting to UK Parliament. So you'll have something to say there as well. We've got the minutes from the RBA, GDP from the EU, US retail sales on Tuesday. Tuesday is a big week next week, the 16th, when a lot of data comes out, and inflation from Canada as well on Tuesday. Bailey's speech, again focusing on sterling, so it's had a big run, is the following day, Wednesday. GDP from Japan on Wednesday, and jobs numbers from Australia and retail sales from Canada finished the week off next week. So again, a relatively busier week next week. As far as the earnings concerned, earnings will have, it's really the big final week next week when companies like the big retailers, Walmart, Home Depot, as the Americans call it, report as well. So earnings have been on the top end of expectations for this quarter. 80% last time I looked had reported, and they were around about the 78% had beaten expectations. So it's been a relatively better earnings season than markets were predicting. But remember, we're always looking forward. So markets are looking forward a year, 18 months. So the yield curve still remains inverted. It's been inverted for since last July, but the steepness, the distance between the 10-year and the 2-year has narrowed, but recently the short end steepened again, which is again suggesting that we may get into this technical recession in the US. But anyway, more on that as time rolls on. So let's just crack on with what you want to have a look at today. So let's start with who was first up. Let me just go back to first thing. First person was Nicole over on GoToWebinar, and she was asking about the CAD, Swiss and gold. So let me just bring in CAD Swiss. Don't often look at CAD Swiss, but there we go. Let's have a look at CAD Swiss. I know I've got it here on this setup. I've got the CAD yen. I've got CAD Swiss. I've got CAD Swiss yen. Have I got CAD Swiss? I don't know. Have I? I haven't. Aussie CAD. So let's bring in a new chart. Any preference for black charts or white background charts, ladies and gentlemen? I'm here to serve. You let me know, and I'll change the background if you want. Anna said there's no sound. Sound distance, okay. I don't know, that's, no, it sounds okay. Everybody else says so. Right, let's find a new chart.
What is the audio?
Let's have a look. Audio. Headset still. So let me make the headset. Okay. So I don't know if that's improved anything for you guys over on GoToWebinar. Those of you who said it was quieter, Nana and others, Nicole, significantly says Nicole, good. Significantly quiet or significantly better? Oh, it's significantly better. Much better, much. All right, okay. So hopefully, guys, over on YouTube, if you're still here, is that audio okay as well? Right. Right, there's lots of you asking for lots of different things, so let me crack on. I've wasted enough time dribbling on about stuff. So I hope that's answered your question about the main event, about CPI, and we'll come to gold in a minute. But first request was over on GoToWebinar, and it was Nicole who's asking for CAD Swiss. So thank you, Andrew, for fixing the audio. I'll finally better. Right, let's find this CAD file. Was it CAD? CAD yen. Let me see. Have I got a profile for Canadian dollar? I don't have. CAD Swiss it was, wasn't it? That's why I can't think. There it is. CAD Swiss. CAD Swiss. CAD Swiss it wasn't, Nicole, wasn't it? So let me just put in. You said you didn't mind, so let's leave this with this my EMA across. Right, so I don't know what time frame you trade that on, Nicole, but here intraday is really a bit boring, a bit sideways here from this week. We had a strong rally on Friday and we've gone sideways basically Monday, Tuesday, Wednesday. Next resistance, let me look at the daily chart. Daily chart remains relatively weak, but again, strong up candle here last week on Friday. What a big bounce that's had. So we've bounced from 65. You see the big round number there, .6520. Let's change the colour. Just bear with me a second. Get this colours all right. So there's that 65.65. Clearly buyers down there on last week, but we'd been, this is the daily time frame now, so we'd been down for March, down for April, sideways during January and February, very range bound, not really trending, but we've had a strong trend down for 2 months, which looks like it's broken. Why do I say that? Sorry, let me just get rid of that. Why do I say it looks like it's broken? Simply because, look at the size of the candle, up candle we've had here last Friday, much bigger than anything else we've had recently, even this big up candle here and these down candles here in the middle of March. So significant selling for this pair, for the Canadian dollar against the Swiss franc. That was the weakening oil price. We've had a big uptick in the oil price in the last few days. That will perhaps lifted this Skype message here. So where we got to? Well, we got to 66.50 as well. So we've gone from .65, 150 pips to 66.50, and that's a big move, because if we look down here, hang on Emmanuel, let me just hide you. If we look down here on my ATR, the daily ATR is 550 pips. I don't know if you can see that there. That says 5, no you can't, I don't know if you can, but that says 550 pips. So we've moved 150 pips in 2 days. That's a big move, very significant when you see the size of the candles. So we're stuck here at 66.50. So Nicole, so to move this higher from here, you can see where we've got to. We've got 66.60, say, where we are at the moment. You can see that 66 60. So you can see we've ran into this a bit of a resistance area, which was a support area here as we were coming down during during April and again in March. So this was a zone we're at now at 66.60, 66.50, this zone here, which we bounced into on the first big sell-off here at the beginning of March. We bounced from it, but couldn't break over the 20-day moving average. We moved down, but not as low as we'd had before. So that we moved up a wee bit, breached the 20-day, but then turned lower again. So we've zigzagged down. So big move down, retrace, move down, not as big as the other move. Let me just draw that. So, yeah. So we had our move down, then we had our retrace up, then we moved down again, but not as low, then we moved up again. But each time we've run into the 20-day moving average from the break of it, haven't we? Then we've moved down again for a significant leg down. So down, retrace, big leg down. So 1, 2, 3, 4, 5 is complete, and now we're moving high. We don't know where this is going to finish, but look what's happened. We've retraced back to a previous support area. Hope you can see that there, right through there. So we're right at that, what was support 3 times. It was breached here on the 4th attempt. We went lower to this 65, and now we've bounced from .65 to 66.50. Okay, classic sort of market moves. Okay, what are the other indicators telling us? Well, the MACD has started to turn up, the signal line's starting to turn up. The RSI is relatively neutral at 52 and flat, so it's not getting too excited after this big leg up from Thursday, Friday last week. So if we're going to move forward from here, Nicole, you want to break this where we are now, 66.60. We need to end a daily candle higher than we are at the moment. So where will we then stall? Well, the next stall is this sort of pivot area through here, which takes us, I would say, to this level through here. Just looking at this at 67.60 against another 100 pips from there. Again, if you just measure this as a single leg Fibonacci decline from this high to this low, there you go. That was, I didn't do that. I didn't know that was going to happen, but look at that. Look what's happened there. As if by magic, the line we just put on happens to be the 61.8 fib level. You know, that's sometimes what happens when you just stare. You see these levels instinctively or intuitively after staring at charts for so long. So 67.60 is the next big resistance. Before we get there, I'd say obviously that level there, that's the 50 period, the 50 fib level there at 67.10. So 67. If we break this level we are at the moment, so they're the upside targets. Support, immediate support sits the 50% retrace of the big candle from Friday, and it happens to be also the 23.6 fib level at 65.99. So obviously 66 is the next big support level to the downside. So bias to the upside. It broke Friday and it's pausing on the break, having a bit of a breath here. Can it break over the 38? Then it's 50, then it's 61 to the upside. That's my higher time frame CAD Swiss analysis, Nicole. Lots of you asking about gold and Mohammed's also asked about gold. He's talking about 19th. So let's have a look at everyone's favourite asset, gold. I'm saying everyone's. Lots of people on here's favourite asset, gold. So, can everybody still hear and see me okay? Hope you can. Right, gold here. Let's have a look at the higher time frame. So the daily time frame remains bid. It's biased to the upside. Sorry about all the lines on here. This is the hourly candle, so there's lots and lots of lines on here. So this big support we had here through 1980 testing area we had during April has held. We've bounced from that significantly during May. We spiked intraday, I think it was this time last week, wasn't it, Wednesday, when we went over 2070, so 2000 has been breached, and that's our big line in the sand. We currently trade today at, where are we today? I can't see that. We're at, where are we? 2031. So significantly above the weekly support level around 2020. 1935 to come down, says Mohammed. That's a long way down, my friend. Especially today. I can't, 1935 all the way down. It's not unheard of, obviously, Mohammed, but not today, I wouldn't have thought. Even with a huge surprise from the inflation data in an hour's time. That still remains bid. So on the higher time frame, gold remains above its 50-day moving average. Sits here at 1967, the blue line here on the end of day basis, and the 20-day moving average sits there at 2008. So 2008. So 2008, nearly 2009 is where the 20-day moving average sits. So we're above, quite significantly above, the key psychological level of $2,000. So, and we're trading at $32 above that at 2032 at the moment. So it remains a bid. As far as today is concerned, I mean, a lot of you trade it on a shorter time frame. The hourly time frame has spiked to the high this morning was up here, following a longer move up. So we spiked to 2038 this morning, and we've moved lower, and then we've flattened out. The shorter time frame moving average have flattened out, the horizontal, so it's not trending. We've got support at the 50-hour moving average here, which currently sits at 2027. Resistance is really the zone we're in now, that 2032. So up, we need to break 2032 on an hourly candle basis. So it's biased to the upside for the last couple of hours, having moved down this morning on the 11 o'clock candle, but it's very much sideways action. That's not trending. I wouldn't be in that market as a trend following sort of a trader. But let me zoom it up. Doesn't mean you can't trade that. I mean, that's your channel today. That's your top, your 2035, and the bottom is around about that 2028 level if you want to keep it wide. So there's a $4 range there. We've been bouncing through, but the support there is below that 2027.50 where the 50-hour is, and you want to break to the upside, but obviously be careful trading ahead of the data. But that's gold currently. Aussie, Emily was asking about the Aussie over on GoToWebinar as well. So the Aussie dollar, this is the hourly chart, Emily. I hope you've been trading this because from last week we were moving higher quite nicely. So we had 1, 2, 3 days, significant days higher through 67, but the key pivot was this 66, this 6666 area we've talked about before on these sessions, haven't we? It was support, it was resistance, and you can see the pivot area, how it worked as a pivot. So here was the resistance here back on the 1st of May, and then we pivoted through it for 1, 2, 3 days, broke to the upside, tested to the upside, tested the downside, 66.33. Remember, we've talked about that before as well, those two areas, 66.60, 66.66 and 66.30 was the support area last week, or the previous weeks when I last did this. But then we've brought the psychological dot 67, so we've rallied significantly from that break. The moving average has kept us on side, bit of a shakeout here on the Aussie, on the RBA, but we rallied and tested the 68 level, too high. You know, we've rolled over. Bias fatigue was hit. Nice little tweezer top there as we hit 68 here on when was that? Just a couple of days ago, wasn't it? On the 8th, on Monday. And then we've drifted into close on Monday. We drifted lower again yesterday to testing 67.50. We closed a tad higher, and we're back to stop 67.50 at the moment ahead of the US inflation data. So we've had a good run. What happens next is obviously what happens next is the next question. What I do with the Aussie there is. So here, if we zoom this in a wee bit, so we've got a nice run. That's a big leg up from last week. You could say, it depends where you want to take your. This is another classic. How difficult legs can be, but you can see up, down, level. So we're through here. So from this low here for last week or so, wherever we retrace it. So we've gone through our first fib level here. 67.50 where we are now is equidistance between the 23 and the 38. So next support comes through here at 67.40, where's that 38 fib level is of that last leg, and then the big level obviously takes us back to 67.20, but you can see the 61.8 of this big 3-day rally here takes us back to the 67 level. So 50 pips to the downside is you cannot be ruled out. But first we've got those levels there. We break 67.80 and we go to the upside basically. So there's your levels going forward, I would say. Who was asking about? Emily and everyone else. Okay. Let's see it. Good afternoon. Good afternoon. Franz. Good day. I would like to have a look at the Euro US if possible. Franz. Let's have a look at the US. And then I'll get to Raymond and his Swiss yen. So the Euro. Again, another one that's had a good run. Here, beginning of May. This is the 1 hour chart again. Franz, again, I don't know what time frame you're trading this, but we look at the higher time frame, the daily time frame. Let me zoom this up. Remains relatively big, although interesting. Yesterday we broke back under the 20-day moving average, so that would have triggered a short. It would have closed a long position from here. That would have been a losing trade, but it would close a short. Yesterday on an end of day basis. So on this strategy here, we've gone back under this magenta line, the 20-day moving average, or the 21 exponential moving average is what this actual line is. Yesterday for a short trade, the ATR was something like 80 pips yesterday or something at that time. Yeah, 78 pips here for Euro. So times that by 2, that might be your target from yesterday's end of day short. But as you can see, we've rallied quite significantly, but we've bumped into a resistance area, and that resistance area sits through 110.50 on an end of day basis. See this dotted line here, 110.50. Yes, we went to test the 111 on an intraday basis, but on an end of day basis, 110.50 was our big resistance, which we couldn't break here at the beginning of April. Sorry, it's not the beginning of April, is it? Yeah, oh, well, mid-April. The end of April, and again here at the beginning of May. So 110.50 is a big line in the sand on an end of day basis for the Euro, but 110 itself is all the way here. So again we've been pivoting through that key big round number 1.1000, and we broke back through that yesterday and back under, excuse me, the 20-day moving average. So it's a short position would have triggered. So we've been over this 20-day moving average all the way back to the 17th of March. So you've had a good run. The weaker dollar, the stronger euro, lots of those positions being bagged and put away after the Fed, after the ECB has happened. Remember, the Fed was last week, the ECB was last week. We got this tweezer top last week. See the tweezer top there? We couldn't get over 111. We couldn't get to 111. We couldn't close the day. We only closed that one day above 110.50, and then we moved down. We've moved down. So we brought the 20-day moving average. I haven't got the 50-day moving average on here, but it's probably around about this 108.50 level, and then the 200-day moving average all the way down here at 106.70. So it's been bid. It looks like the run may be over. Profit is being taken, certainly with some players as we got to 110, 110.50 with some guys, but certainly yesterday here closed out at 109.50 and profit bagged from this big run up here. So on an intraday basis, which I'm sure you're all more interested in, so we are biased lower Monday, Tuesday, and again today. So we're at 109.50 at the moment. And again on an intraday basis, it liked to go high. It was a weak one against the trend. Remember, we're now short, and we would have gone short again. That would have been it. So this 1 hour trade was short from here. Would probably been topped out if you wanted to take the trade before inflation. I'd be a bit dubious about that. But 109.70 has been our high here. We sort of tested it this morning, went a bit higher again, but sold it off again. So that's a key resistance, 109.70. Signal line remains below zero. It's starting to go up here on the MACD, starting to move back down again. So 109.50 is support, and then 109.35, 109.25 targets to the downside today. But see what that inflation data looks like. Okay, Raymond is asking about Swiss yen. Swiss yen, again, another one that was brought to my attention last week. Swiss yen here. on an end of day basis, Raymond, it remains bid. You know, as we talked about last week. Strong April, big end to the month. We pivoted to a high at 153.50 through here, beginning of the month, and we've been down since then, but we're way above our 20-day moving average, so it remains bid. That might have closed you out here, this test of the one back to 150, 151.70 at the moment. The ATR is 1.4, so it does move a lot of pips, this pair, so obviously trade it with caution, but the 20-day moving average is held, and that would be your support area now, and that's now above 150, so that remains bid. It's been a bit squiffy over the last 4 days as far as trend is concerned, but a big rally here at the end of April, and that's been more or less sold off. But 150 support, 151.70 is where we trade now. Target to the upside 153.65, the high from the beginning of the month to the upside. Raymond, again, I don't know how you're trading that, but if you so the daily remains relatively bid. Obviously on the 1 hour time frame, it's quite choppy, so that would have triggered short here. Now, obviously you've been up, but that's now gone short in the last hour or so, having been long from yesterday. So there's the long on this rally here at 6 o'clock yesterday. Rallied, didn't break under that, and you would have got out. So you would have got in. You'd have got in here, and you'd have got out there if you just used the moving averages to take out, and you would have got 0.23%. 347 points over 18 hours, just simply following that moving average approach. And now it's triggered short here. The ATR at the current is 0.17 here on the 1 hour basis. So is it going to move back down into here? But so it's been long yesterday, closed out the long this morning, and it's just triggered short now on the end of hour time frame for you, Raymond, my friend. Now then, let's just go back to GoToWebinar, guys. Nobody's asking for any more. CAD Swiss selling Nicole. We have done CAD Swiss, haven't we, Nicole? I'm not going mad, am I? Because you were first to ask, I think. CAD Swiss, yes. Hope I've answered your question, Nicole. So there's nobody on GoToWebinar anymore, so we'll go back to our Facebook friends and our YouTube friends over here. So, Aloysius, dollar yen from Facebook. What are we expecting? Well, more of the same basically from the Bank of Japan, and the argument is that the Fed may have done. So here we are. We're trending higher over the last 3 or 4 days, 4 days now. But again, the 200-hour moving average providing nice shorting opportunities this week. So we've ran into it here on Monday. We ran into it again on Monday. Ran into it again yesterday. It spiked again yesterday and bounced. So we're really, I hope you can see that if we zoom that up a bit. We're sort of channel bound nicely, supported by the 50-hour moving average. This blue line here at 135.07. So we're above 135, the support line. This week, and the resistance line is at 135, so 135.50. So it's not a massive range, but here on the one, but again, you can see it's nicely looping. That's the sort of move you want. Nothing goes in a straight line forever, and this is sort of up and down, up and down, up and down. But the highs are getting higher this week. The lows are also getting higher. So we've got a channel that's into its 3rd, 4th day now, from these lows down here at 134. So the big round numbers, 134, 134.50, 135 and 135.50 remain in play. So our support is now, though, key support 20-hour is at 135.20, the 50-hour moving average at 135.08, and then 8 pips below that is obviously the 135 big round number. 135.50 remains the resistance, and above that 135.80. So that's what technically is what the market is showing us. Obviously the CPI could change all of that in the drop of a pin, which is still 50 minutes away. I think I'll be able to keep talking for 50 minutes. I'm sure. I hope that answered your question. Swift Curry is asking about gold. Yao's asking about gold. Yao, I hope you're still with us. Audio's terrible. Hope it's got better for you, Yao. Are you still here or have you given up on me? Yeah, looks like you might have given up on me. You're not here anymore. Perhaps you are. Lots of questions. Buenos Aires. Buenos Aires. Hello, my friend. Somebody selling gold. Let's have a look at gold a bit more again. I'm not going to look at it all the time, but yeah, I mean it's sideways action. So again, another one, as I said earlier, supported by the 50-hour at 20.2760. Resistance is at 20.32 today, bouncing around. You know, I wouldn't be in that. It's undirectional, biased to the downside because it's like running into the 20-hour but going sideways. I wouldn't get too excited about on the hourly chart frame. The daily time frame, as I said, remains bid. So if you're looking to take longs, you're with the daily time frame. So you should be biased to take long positions. This was long yesterday, and this is the hourly chart, guys. This was Tuesday, and Monday was long, and we've been short so far today ahead of CPI. So, but your support areas here. So remember, the shorts today would have been against the trend. It would have triggered short here at 8 o'clock. Dipped. You didn't get very many. You got $3 down before it reversed and probably stopped you out. Maybe depends where your stop was. But then it's been slightly sideways. It tried to go low, it hasn't yet broke. So this 50-hour is providing key support, technically ahead of the key CPI data. So non-trending gold market at the moment. So stand by your bunks. You're looking for a mean reverting strategy between these two levels here, but by looking to the upside. Prasad, hope you can hear me. We just had a look at gold. Michael, Vedette, Michael, gold 2050. Well, we'll see, Abdullah. 2032 is our high today, or our resistance area today, and I say the 50-hour down here at 2027 is our support so far. But obviously, market is just waiting for the CPI data. I wouldn't be careful trading that before we move forward. Audio is terrible. I hope it's got worse somehow. Obviously, much better. That was ages ago. It's echoing long. Dollar. No, Nasdaq. Ayanda's asking about Nasdaq. I didn't have a look at the charts this morning. I was away from my charts this morning. So again, the USA 100 again still remains biased to the upside. Remember, the big tech companies are the ones that are really have done not very well, but have done well, better than significantly, some of them better than expected. Some big moves on some of those tech companies. And again, this is a daily basis. So again, you can see the bias is to the upside. The 50-day moving average provided great support all year, really. Here from the breach of it here at January, we came down to test it here in the middle of March. We bounced off that significantly. We moved to 13,300 zone, and that remains the resistance area where we are now. And then we've gone sideways, really. For all of April, and we'll continue it in that channel here in May. Although, as you can see, we're at the top end of that horizontal channel at the moment, at 13,250 plus at the moment. So bias to the upside. Our 20-day moving averages provide fairly decent support. The up candles are bigger than the down candles. You know, I mean, again, you don't need to be a trader to understand that. The white candles are bigger than the red candles, aren't they? So again, that's suggesting there's a bias to buyers, there's a bias to the upside. But we do need to break to the upside. So many analysts, you know, people much better than I am, much better qualified than I am, are saying, you know, this is looking like if this was going to break down, it would have broken down before now. Some people say, we'll see. You can never tell till it's happened, but the bias still looks like it's to the upside. So stay in it until it tells you not to be in it. So from my point of view, this broke significantly here at the beginning of the middle of March with this big up candle here when we bounced off 12,000, and here we are at 12,260. Sorry, 13,260. So still to the upside, but not doing anything all of April. It was, you know, grind your teeth bit, and waiting for the earnings. The earnings have started in the middle of April. We had a bit of a wobble start. We had a strong start from the banks. We had that wobble obviously beginning in March because of the potential credit crisis, potential banking crisis. It doesn't seem to have played out, but has it run its course yet? And again, I would argue not really. But at the moment we're still biased to the upside. So this is still biased. So the daily is long. The weekly chart remains long. The weekly 20-week moving average sits all the way down there at 12,750. So again, you can see that here on how it's run into this 13,200 level. So we need to break really where we are now, 13,260, as we come to the end of earnings season. So bias again, this is daily to the upside. And yeah, as far as the intraday trading is concerned, we were lower yesterday from the rally on Friday post non-farm payrolls. Sideways Monday, down yesterday, and we're down a bit this morning. This is the futures, remember, as well, so I'm talking about the futures market. So again, testing that 13,200 level this morning and bounced from it again, so key level here. But on an intraday basis, we've been under the 20-hour moving average and short. If you were trading this on an end of hour basis, it went short there yesterday morning, and it's remained short. Take it out there, got back in there at 7 o'clock last night. Might have bagged some. It's nothing was happening. I'd stayed in that. Might have taken you out there actually, but then we've gone short again here, and it's reversed again here. So again, there we might have been losing trades. Although if you trailed the 20-day moving average hour as your resistance or stop loss level, you'd have still been in that. This is looking to perhaps go long from this bounce of 13,200 on an hour basis, end of hourly basis trade. So it's biased to the downside so far today. Support is all the way down there at 13,200. On an end of hour basis, it's 13,225. Resistance sits there at 13,265. And yeah. And then the 50 hour at 13,295 to the upside. Okay, so all good. Everybody can hear me again. Oh, that's all good. Mine is good. Lieber Gold, I hope you're around here. Mozart, you've asked about that before, didn't we? Screen is blurred. Okay, I can manage that. Joe, thank you for hanging around, my friend. I appreciate that. Gold, we've had a look at gold. Gold audio is good. Gold. CPI in the prediction. I tend not to predict, but let's have a look. If we go back to we can see the expectation for today was that the headline, the key. These are the two most important ones. FAMI, sorry, 5.5%. I said it as I said at the beginning. Well, you asked your question right at the beginning. Sorry, this is 50 minutes late or 45 minutes late. We'll see. Sticky services inflation is the key thing that's always attracted me. Remember when we spiked last June? A lot of it was very sort of particular. It was second-hand cars had rocketed in price, and that was a big component of the goods inflation. Goods inflation has come down very significantly. This one here, remember, is X the volatile energy prices and food prices. So commodity prices and oil prices fell significantly in April. So this might overshoot the headline. Might overshoot. But again, German inflation this morning was confirmed at 7.6%. So it's still significantly higher in Europe than it is in the US. 10% still, double digits in the UK. So if this it's something like 5.4% or 5.3%, that will add to the argument that the Fed should be pausing, and that will add to this weakening of the dollar that we've had. If it spikes up in 5.6 or 5.7, we might see this reversal. We've seen today in the dollar. We might see it. Reversal in the fact that it's weakening. So it might continue to improve again, the dollar, on the consumer number as it comes out in 40 minutes. But watch this space. So again, I don't like to predict things, family. There's no point. Let's react to the news, react to what's happening. As far as the markets are concerned, if we look at the sort of intraday, it's basically very much a very calm. Let's see, the euro as an example. A relatively wait and see mode. Although the euro did move down relatively significantly. Yes, I haven't broken the 110 level, but on an end of day basis, you can see we've rallied quite significantly. But it was a significant day for the euro, as some profits were bagged ahead of perhaps the CPI data, but after the central banks. So a few days after the ECB and the Fed, the euro run has ended as far as this strategy is concerned. The 20-day moving average has been breached again. So 110 didn't hold, 110.50 didn't hold, and so we're short basically euros. So we'll see how it all pans out later on. So it's very much a wait and see mode. I say until this inflation number comes out. Gold. I'm not going to put all of those on. You've asked about gold. No, Radam. We're just waiting and seeing. I would have a look. Yeah, leader, stop spamming. You're absolutely right, my friend. Go for it. Some kids out there. Samuel, good afternoon, Nigeria. Hope you're well. Dollar yen. Let's have a look at some dollar yen. We haven't looked at this much. So looked at it earlier, but I'm happy to come back to it as well. And Fresh is asking about US oil as well, fresher moves. Let's have a look at that. So dollar yen again, as we said earlier, bias to the upside this week. Again, I don't know what time frame you're trading this on, Mashido, but if we look at the daily time frame first, you can see 131 here at the end of March and the beginning of April, but we've rallied significantly in April. Tested the 200-day moving average at 137. We even went to test 138, which was this high we'd got to intraday here at the beginning of March. We did the same again here at the end of March and the beginning of May. But then, it was a very strong rally, very strong descent. It's a spike. I hate those sort of spikes, those big candles, which were reversed virtually instantly. However, interestingly, if I zoom this up again, the reversal wasn't as big as the spike higher, and the 20-day moving average yet again has provided key support during April and this early part of May. So the key support for dollar yen on an end of day basis, Mashido, is down here at 134.50. Since we breached that last week, we bounced off it here Friday, and we had an update Monday, an update Tuesday, and we're currently higher at 135.35. Another one, we were at 4 days higher, but if you look at the last three candles, you can see now they're all positive, but the momentum is running out, isn't it? Fridays was big. Mondays wasn't as big as Fridays, and Tuesdays wasn't as big as Mondays. So let's see what this inflation data out of the US looks like. But 136 is 135.50 and 135.80, and then 136 are the key lines I'm looking toward to the upside. So if we look at the 1 hour time frame, from the dip here below 135.50 yesterday, we've rallied and it's still long basically. It's not yesterday, no, it wasn't yesterday, that's the first time I'm talking about. This is the one I've talked before. This channel we've been in, nicely supported by the 50-hour moving average here at 135 and topped by the 200-hour moving average at 135.50. So we're in a 50 pip channel, biased to the upside. We're above the 20-hour moving average and have been for over 24 hours, and we trade at 135.35. So the bias, dollar yen, remains to the upside. Nicole, are you going to look at US oil? Yes, I am indeed, because somebody's just asked. We had a big surprise for inventories yesterday, the private inventories, and we got the official EIA inventories today. So last week was pretty horrendous. We went down under $64 a barrel on an intraday basis. This is last as the market closed out here on the 4th of May, Star Wars Day, and it happened to be my wedding anniversary as well, Thursday. But since then, we've rallied quite significantly, haven't we? So we were sideways Thursday, Friday, Monday, Tuesday sideways, but we're balanced to the upside. So big rally from $67 through $70 here on Friday. Follow through on Monday follow through on Monday and then consolidated yesterday. We got the inventories yesterday, so we're over 72, went to 72, 73.50 and couldn't break higher than that. But yesterday's close was above Monday's close, which was above Friday's close, which was above Thursday's close. So it's again another one that's biased to the upside, but flattening out here on this 1 hour time frame. So 73.50 is the resistance today and from yesterday and from Tuesday. So 73.50 is resistance, fresher moves. And Nicole, support I would say is my blue line here at 72.20. So quite a wide range there for oil, but remember we can have some big candles. Inventories this afternoon, let me just check. Inventories are expected to show a decline of 2.2 million barrels. Last week it was 1.3 million barrels. So that's relatively positive for gold because it's showing that demand is taking the inventory away. So we shall see. Declined here on the hourly chart from that 73.50 yesterday and this morning. Triggered short here at 11 o'clock, but really doesn't want to go back to test our 72.20. We got support this morning today at 72.60. So 72.60 support, 72.20 below that. Resistance is obviously where we sit now, really at $73, and then back to 73.50. So see what the inventories, the official inventories, show us later on today. Are they going to be in line with the private inventories from yesterday? So $73 is where we trade at the moment. 73.50 is our resistance. 72.20 our support. And today, but yesterday we went as low as 71.28. So there's still plenty of volatility in the oil market, although say relative consolidation above that 72.20 level yesterday and Monday as well. So there we go. Hope that's answered your questions. Gold, oil, sugar, Nasdaq. We just looked at Nasdaq. Gold, we looked at gold. Gold, Nasdaq, we looked at gold. Okay, Samuel, new one. The Dow. Let's have a look at the Dow. The US 30. What have I got here? There we are. US 30 on the. Whoops. Why is that like that? Why is that set up like that? That's very strange. That's zoomed in too far, I would guess. Why is that looking like that? What's this? That was very strange. I don't know why that looked like that. There we are. It's fixed itself. Perhaps it's going back too far. So the Dow. Remember what the Dow is, ladies and gentlemen. It's the 30 big industrialized company. The Dow Jones Industrial Average. So it's the 30 biggest industrialized companies in the US. Companies like 3M and Caterpillar used to be big bellwethers of the US economy. Perhaps less so these days as the tech companies have taken pride of place. But the Dow has outperformed certainly the Nasdaq so far this year as markets have come down. So what's the daily time frame telling us? Well, we remain sort of consolidating, really. Again, just like we saw on the Nasdaq, but perhaps more exaggerated here, because remember there's only 30 components of this particular index, so it doesn't take a good or bad earnings from one of those 30 components to make quite a significant move on this particular asset. So the Dow has support here at 33,100, which we went to last week, and we can't get over 33,800 so far today. So let me have a look at that. Yeah, it's really consolidating. See how flat the moving averages are. So again, if you're trading this on an end of day basis, that's your support there, 33,125, the 50-hour moving average. The resistance, we just again sliding sideways there, 33,500. We want to break above if we're going to go higher, and then 33,800, and then our May high took us over 34,000. Okay, so zoom in again on an intraday basis, the hourly chart. Again, you see that consolidation yesterday. So far today, obviously we're ahead of open, but a rally on Friday after the non-farm payroll data from a decline last week, a nice decline. Non-farm payroll came in here, shook the market. Up we went to the 200 hour, broke the 200 hour, and then we found that's resistance. So and so this is biased to the downside today. There's the 50-hour moving average that has capped things so far today, and there's the 20-day. So we're in nicely aligned. They're starting to move lower here on the 1 hour time frame. So 33,500. Yesterday's low is being tested already today, so perhaps we're biased to the downside. But we did bounce from that yesterday. Will we do that again today to test the 200 hours? So, or is this support going to get broken today? Remember, we burst through it on non-farm payroll data last week. We're going to have a similar impact from the inflation data, which is less than 30 minutes away now. So stand by your bunks, traders, where we go from here. Again, it wasn't that long ago we were down here under 33,000. So plenty of action in the Dow. I do like the Dow on a, I don't know how you trade it, Samuel, but it's a nice mover down on the scalping time frames, the 2 minute, 5 minute time frames. Again, use the same setup. So I mean, just use this as an example. So again, it's biased here. This is the 5 minute time frame today. Zoom this in. So that was the start of the day, sort of sideways. So if I was going to trade this, I'd be interested in the pre-market high, the pre-market low, and where are we now? When you come in. So that's the pre-market low down there at 33,495. Pre-market high, before the cash market opens. This is the USA 30 was 33,653. I'll mark those on my charts. But the bias, as you can see here, from a moving average point of view, from a sort of very quiet Asian session, it suddenly ticked lower here. What time was that? 10:30, the middle of the or 8:30 London time, 9:30 Frankfurt time. So it ticked lower then. I wasn't in this morning, but it's moved lower. Then the RSI here, 7, has been chopping about, neither overbought nor undersold, but big move down this morning. And again, the 220 period moving average on this 1 minute chart, 5 minute chart has held, and the 50 has. So it's again another one that's biased to the downside. So you take your choices, you trade the time frame that fits you, that fits your mentality, your psychology, your personality. But that, Samuel, is biased to the downside currently. But as I've been speaking, it's actually starting to move up, hasn't it? But as you see, there's run to that resistance at the 20 period moving average and then the 50 period moving average. They've actually got quite close there, so we could have a breach. But as I say, 25 minutes to the main data of the week, let alone the day. Jean Jackie, good afternoon from Santiago. Santiago has always fascinated me from a kid because it was a long way away from northern England, but it always had that very sort of exotic appeal. And the Chile, or Chile as we say in Yorkshire, everyone else says Chile these days, don't they? But nice long finger of a country, big old country, Chile. So big copper mines. So yes, good afternoon. Or good morning, I should say. Colombia, good morning, Colombia. Gold, touch on gold. Let's go back to gold then. I've looked at it for 5 minutes, all right, but nothing's really changed, my friends. Let me tell you again. So the 50-hour moving average is key support today at 2028. Let's round the numbers up. And our resistance sits at 2032. So we've got a $4 range today ahead of CPI. But under the 20-hour moving average at the moment. Okay, 25 minutes to go. Watch this space. Those two areas will be tested as the data comes out. I'm not guaranteeing it, but let's watch what happens later on. Buenos dias. Good morning, Garcia. I hope you're well. Anything you want to have a look at? Panama. Never been to Panama. I hope it's as good as everybody says. Panama City. And a friend of mine who went through a cruise ship last week through Panama. Who's next? Mohammed. Good afternoon. Euro dollar 1 hour 4 hour. This is the sort of stuff I like, guys. Mohammed wants to look at the euro dollar, euro USD on the 1 hour, 4 hour, and 1 day. That's what you want to be looking at. So let's have a look for Mohammed. So the euro. Let's start at the higher time frames and work down. So we'll do it the other way around. So we'll filter down. I don't know what's your trading time frame, Mohammed. But let's have a look. So, as I said earlier, we had a big move down yesterday. We broke under the 21 exponential moving average. So on an end of day, Mohammed, that triggered short yesterday on this particular chart setup. Okay, so we'd have had an entry at 109.56 last night, or when the candle closed, which was last night, obviously. The ATR is 78 pips, so we're looking for at least 140 pips from here. So 140 takes us down here somewhere. What did I say that was? Back to 109 area. So the blue line is where we're looking to get to here on an end of day basis. Our stop loss initially, you could have had it up here. Should be around about this 110.50 level. So risk reward isn't great. In fact, the risk is 1-to-1, isn't it? If we're going in at 109.50, our stop loss. 900, so we're still well, it's less than that, but that's what we're looking at on this particular setup. But again, we've had lots of pips here as we've rallied up from this break back up here, back at the middle of March. So it's been long. So we're now starting potentially to go short. So the daily time frame has turned short from being long in a day, but it would need a while to feel through if this break is going to hold. The 4 hour time frame would have preceded that. So 4 hour got very, very choppy as we tried to break 110.50. The tallest candle here on the 4 hour took us to 110.80 zone, chopping around, and the break of the 110 level happened earlier in the week here. You can see this candle here. A relatively big candle, not as big as we'd had obviously earlier last week after the Fed and the ECB, but we've been lower here since the 8th of May, so since Monday. Euro dollar's been a lot short here on the 4 hour time frame and remains short. So big move down to 109.50 from a trigger here at 110.02, so I'll call it 110. So 50 pips to the good at the moment. Reversed a wee bit yesterday, but remains short. The signal line here finally broke yesterday at 4 o'clock. Reversed a wee bit, but we've continued to move down. RSI weak as well at 37.64, sort of flattening out a wee bit. So the trend remains down. However, for 4 hour traders, you've got a big support. The 200 period moving average sits at 109.40. So we tested it on Monday. Will we test it again today? We shall see. But that remains where the 200 period moving average on the 4 hour time frame remains, Mohammed. So again, another one that's biased to the downside. And finally, the 1 hour time frame for the euro ticked long. Last big short was this one yesterday. Here, this big candle here. Remember, size matters for the body of candles. Remember, guys. So big short here on Monday at the 5 o'clock candle. It broke the 200 hour moving average. Retraced a tad, and it's the 20 hour moving average kept you the right siding to close on Monday, kept you in the trade yesterday. You might have got out there as it's gone back over the 9 period moving average. It went back over the 20 period moving average today, so a few less pips. But again, triggering short here this morning at 9 o'clock. That would probably have taken you out if you, depends how close your stop loss was. but you know, I would have added again here at 12 o'clock as we went to 109.50 area, and we're sort of ticking low again. So 109.50 is where we trade now. 109.35 the next downside there on the 1 hour time frame. Maurizio, good afternoon. Good afternoon. Good morning. Dollar CAD. We haven't looked at dollar CAD for a long time. Bad people. That's a great handle, my friend. Chemo, Birthright, dollar CAD. Again, another one that's been trending quite strongly, helped by the bounce in the oil market. Where's my dollar CAD gone? What am I doing? I'm going the wrong way. It's my hours up. I was told I've been talking for an hour. I started to flag. We're an hour and 10 minutes in. So dollar CAD. This is the 1 hour on the dollar CAD. See, this takes us all the way back to, where does this take us back? This is middle of April. So let's look at the daily time frame. Very choppy, corresponding with the actions or non-actions of the Fed. Obviously, the oil market has had a big impact. So 136 we rallied to. We went to 136.50. Hung around up there for a while, but we've turned around really aggressively, haven't we? Dollar's weakened, CAD's come back on the rise in the oil price. 136 been rejected, through 135, through 134 on Friday, and we're back to where we were sort of closed out on Friday at 133.85 at the moment. So, and on Monday we spiked to test the 133.30 area, which was that low from April here. When was that? Was it again mid-April? So the low 133.30 takes us back to this also low here of February. So it's a key level 133.30. Don't ignore it. We got within it a smidge on Monday, and we're trying to tick up. So if dollar CAD is going to move higher today, we need to breach and close above the 134 area. But that has been one significant move, hasn't it, from the highs to low. So again, if we stick a little fib level on that, let's just average out the start round about there, and that was on an intraday basis. So again, 135 is where the 61.8 fib level sits more or less. 15 pip range there sits around that 20-day moving average at 135. So we're significantly under the 200-day moving average, which sits at 134.50, and we're under 134 as well. So there is some significant upside potential in this relatively volatile pair at the moment. Remember, we had both jobs data for Canada and the US last Friday, but we have tested to the downside. So what dollar CAD needs to break 134 if we're going to go higher, and then 134.50 on an end of day basis. Chemo, if you're trading this on an intraday basis, so on an end of day basis, buys to the downside. Okay, it's negative. So be careful taking longs. And as you can see, there's the 1 hour. Sorry, there's the hourly time frame. Big move down last week. There's that one. There's that 133.30 level. We've bounced from that Monday. We rallied a tad, tested 134 again yesterday. Couldn't hold it, couldn't break it, and we've gone sideways again into this key data in a moment. So we may test 134. We're likely to possibly test we probably will test 134 on the news, because many players use those key levels. Because many stops and targets might be sat there, but that's not playing ball, that hourly chart. Sorry, but you can see flat. Where's support? Well, it's difficult to call that on today's level. Yesterday's low was on the open down here, 133.60, but that Monday spike to this 133.30, 133 level. Can't be ruled out either, but 134 to the upside, then 134.50 intraday today. Chemo, bad people. That's an interesting handle. Nicole, thank you. Take care. All the best. Got to go. You got to go. Yeah, talk too much, don't I? People schedule an hour and I'm still talking. Anyway, you asked to hang around till the inflation data, so I'll keep going till then if you want. So dollar yen, bad people. Again, nice channel dollar yen today. There we are. There's the 135 support. That's the 50-hour moving average, and the 200-hour moving average at 135.50. So you've got a big 50 pip range this week. All the support is here. I mean, you could get a bit, 21 as well is a bit closer at 135.20. So see if that range gets tested. It's likely to on the CPI data if there's a big surprise to the upside or downside, or even if it comes in level. Saying definite sell. Are you talking about gold or what? My friend, I don't know. Scorpion, Rand, dollar Rand. Let's have a look. It's on a different profile. I've got it on my emerging market currencies profile. This is the Rand on a daily basis. So the big psychological 18 level, 18.000 provided support during April and somewhat to March. 18,500 was the resistance here in February and March. We've breached, and April. We've breached that significantly. So the dollar's come back against the weakening rand, particularly over the last couple of days. Some comments from the central bank and the president. Ongoing, obviously, issues with electricity supply from Eskom. And we've just got to a new 2023 high yesterday. 1871.65 was broken. That level we'd had here from March. These candles, by the way, guys, are Heikin Ashi candles. Okay, blue is positive, red is negative. They're great for establishing a trend. The least amount of wick you have and the size of the body of the candle is still important. So here it triggered from a bit of a sideways action. It went from red to blue, so that was a long trade here. It's above these two. These moving averages here are the 50 period, or the 49 and the 13. Just happens to be the setup of this particular chart, but you can see it's been supported quite nicely, really, during April and during May, and we're spiking here, and that was that level there, that 1871.65 level, which we breached to, and that's where we traded them up. So 19 is calling for the rand, Scorpion. Big strong day yesterday, strong day today so far as well. Yeah, don't be careful betting against that one. I was going to see if they've got another rand setup, dollar rand. I'm not sure. Yeah, so this is the normal candle pattern that we've been the template we've been looking at, Scorpion. But as you can see again, it's actually see that big move yesterday and today. These multi-month highs. If I take that to the weekly, you can see what a strong week we've got, and that 19 level there, which was last tested back in March 2020. So the height of the worry about or the pre-COVID levels is where dollar rand is getting itself back to. So the rand weakened significantly during 2023. Dollar rand rallying here. I mean, it's been positive all year, basically, hasn't it, from the beginning here, the end of January, on this weekly chart. So 19, the spike or the intra-week high as the COVID crisis started to crack took us to 19.34000. So the weekly is positive, the daily is positive, very positive in the last few days. And again, I don't know if you're trading this intraday, Scorpion, but the 4-hour. Particularly positive as well if we breach these levels. Again, another classic, technicians love this sort of stuff, this resistance. Big candle here, stalled for a couple of candles, big candle again, and we're biased to the upside, and the 1 hour will be just a similar sort of move. So here, been tricking short. It was, you've been very much supported. if you've got this trend, congratulations. That was from Monday at 10 o'clock. No, it wasn't, not Monday, the 9th, yesterday at 10 o'clock here on the 1 hour, and it's just rallied and rallied and rallied, hasn't it? A rally didn't close. Some big announcement this morning. I haven't been around to see the news. It's caused that scorpion, but a big move up. 19 on this chart. Obviously, the 1 hour chart looks a bit further away than it does on the weekly chart, but certainly that's not to be ruled out to the upside. Swift Curry is asking about the guppy. That's GJ. The pound against the yen, or often known as the guppy or the widowmaker, because it can move around very, very quickly. Let's have a look at it on this chart. So pound yen daily. Again, sterling's been bid recently, and you see that no more clearly than on this pound yen chart here. And the last big break of the 20-day moving average was back here on the 29th of March. Big positive candle. Looked like we were moving lower. We didn't want to go under 160. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days we tested 160. Intraday we went as low as 158.20. Didn't want to do that. Big turnaround in 2 days. And the break of the 20-day moving average occurred here on the 29th of March, and it's been long ever since. So rallied through 165, cooled at 167, big spike up to as we ran to the end of the month. Remember, I always say this: end of March, the end of April, beginning of the new. That was the beginning of the new financial year. Was here. New Bank of Canada, Bank of Japan, excuse me. Bank of Japan governor took their reins, and sterling has just continued to outperform the Japanese yen. We're over 170. I'll actually mark that on there. I should put that on there, shouldn't I? 170. That's a key level. Actually, let me put that as an intraday high. So our intraday high has taken us here to 172.26. Let me just put the 170 level on as well. Just for Alex to come back to this particular chart. So the upshot of all of that chatter is that pound yen is long. You want to be looking for, if you're trading this on an intraday basis, the 4 hour, the 1 hour time frame, you should be looking to take longs rather than shorts, because you're with the higher time frame trend. And so we were up on Friday significantly from this 168.70 test from last week. Small candles for Monday, Tuesday, and a small candle today, but again biased to the upside. So 1 hour messing about a bit, but there's that 170 level. We're still over 170, and really not really trending there on that 1 hour time frame. Swift Courier. So I don't know what time frame you're interested in. 4 hour, more positive. Last significant move was up and then down, and then the last move here on the 4 hour time frame was from the 5th of May on Friday, ahead of non-farm payrolls. It's been positive since then, supported by the 21 period moving average, but again, perhaps waiting for some more data. Obviously, we've got the Bank of England tomorrow with that 25 basis points, more or less, baked in. Will there be chatter of more? Will there be more chatter of let's not change? A split on the MPC is likely. Dollar CAD. We just looked at dollar CAD, Peter. Dow we just looked at. We looked at the euro AMES. It's as I said, the key thing with the I don't know, I've got pound. I've got this wrong charts. Euro. Just go back to the euro. Let's look at the euro, different chart. Got the euro dollar here. What colours do you want? No, that's on that one. There we are. There's that break of the. It seems to be. I don't know what setup this is, but I've got to start. That's different. What's the red line on there? That's the 10 period moving. I don't know why I've got that on there. But anyway, we closed into the under half of the Bollinger Band here yesterday, under the 20-day moving average for the first time, as we saw on those other charts, since this rally, this sort of sideways action here and the move here on the 17th of March. Here we went over the 20 into the upper half of the Bollinger Band. We've been in the upper half of the Bollinger Band ever since. Top of the Bollinger Band has capped us. We've rolled over, got to 10.90 last week and moved down. So that's gone short now. But the lower half of the Bollinger Band is very close there, isn't it? 109.20. So zoom that up a bit. So it was long. Now it's short, basically. It's what that technical chart is telling me. But we are a wee bit channel bound, so we'd like to push this Bollinger Band lower. But as you can see, the Bollinger Band the bottom came up yesterday, the top came down. So there's a bit of it's not a very significant squeeze, but it's good enough there. The RSI there went under 50 as well here, the faster moving 7 RSI. So that's short, confirmed there. Here on the stochastics was talking about short all the way back on the 14th of April. So euro, yeah, CPI is coming. Stefan, yen, dollar. What's that? Dollar yen. All right, Leon. Let's have a look at this before the data comes up. Kiwi yen. Are we still on upside? I'm looking to take it from higher time frame where we headed. Kiwi yen. Let's have a look at Kiwi yen for Leona. Kiwi. Where's my Kiwi crosses? Here we are. Kiwi yen higher time frame. So let's have a look. Kiwi yen. So certainly this 1 hour time frame has been stronger the last few days. Let's have a look at the higher time frame. So what's the weekly? So the weekly, Leona, is positive. We had a big strong week a couple of weeks ago. 2 weeks ago here, the last week of April, back over .84 from a low of 81.50. So that was a huge week for the Kiwi yen. Followed through last week, and we're up again this week over 85, 86 is calling, isn't it, on an end of week basis. So the weekly is positive. The daily is positive again from this huge candle we had here at the end of April. From that support of 82, so that's been positive for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. 86 is the next big line in the sand, Leona, for this pair. As you can see, we haven't been this high. Sorry, I'm going to go the other way. We haven't been up here, so we're big strong candle here on Monday. It took us over 85.50, and we haven't been over 85.50. So this huge decline we had here on the 20th of December. So we've got a new 2023 high and positive candles. So this is daily, remember. So big ranges on this. So be careful trading this one. But it's certainly bid to the upside. The 20-day moving average, or the 21 EMA, now sits at 84. We're trading at 85.65. The average true range on the daily basis, I don't know if you can see that down there, Leona, but it's around about 1. It's not .95, so 95 pips, nearly one whole move. So to get to 86, it's certainly not out of the question, and certainly to get back to 87 is not out of the question either. That remains sort of bid to the upside, with support now just below, I would say just below, actually no, probably around 84.50 to be safer, but some strong candles, some big movements over the last couple of weeks for Kiwi yen. Remember, the Kiwi has one of the highest interest rates in the world of the major currencies, and the yen remains low, and they're continuing to continue this low accommodative policy. So anyway, let's have a look. It's 3:30. What's the data come out at? Let me just check the tallies off. What's my calendar? I got my calendar up. Let's have a look what the calendar says for the data. I can hear my colleagues typing away madly here. Let's have a look.
Yes.
So it's softer. Headline 5% core, 5.6%. Oh no, it's consensus. Let's have a look at my calendar. I'll share my calendar with you, ladies and gentlemen. Wednesday, the 10th of May US consumer prices for April. So that oil, that as we expected, that decline in the oil price and generally commodity prices as well has weighed on the inflation numbers. So the red ones here are the most important. So the core, excluding food and energy, is flat for April. It was for March, so it's coming at 0.4 of 1%. The headline, which will obviously many people will grab, has come down to 4.9%, so it is softer. And the core, excluding food and energy, on a yearly basis is confirmed at 5.5%. So again, it's come down. It's only one tick, but it's what the market was expecting. That number there, I would suggest, the 4.9%, in fact, to come under 5%, will give the doves a bit of an elevation. That will probably weaken the dollar. What's this? Consumer price seasonally adjusted is a bit weaker as well. A massive rise there in building permits for Canada, 11% from 5.5% last time, which was revised lower from 8.6%. So again, mixed data there, but it was expected to be negative. That's a huge rally. It might be something particular about the some legislation in Canada. But that's an interesting number. I'll look at that later. But yes, the main number would suggest that, let's have a look at what our charts are doing, would suggest, let's have a look at the euro, let's have a look at the dollar. Actually, let's have a look at the dollar index. Let me go back to my default, because the dollar index obviously captures, it's a weighted index of 6 major currencies. So there we go. There's an example of the weaker dollar. So, you know, as I say, the doves getting ahead, so that 135. So our range we were talking about there for dollar yen traders, guys, has been breached significantly. So we're under 135, we're at 135.70. It's a weaker dollar, as you might expect on that day, so that under 5%. Again, it's a big psychological number. There'll be lots of skeptics outside the world. They've done that deliberately, haven't they? But that's what's going to grab headlines. US headline inflation under 5%. Remember earlier in the day, the German inflation was confirmed at 7.6%, and UK inflation headline is twice the US at over 10%, so at double digits. So that's probably adding to this. I guess sterling might be one of the biggest movers on that move. But the dollar index, euro, is at 109.80 on that number, looking to reverse the decline we've had earlier today. Dollar, yen declining, and sterling a big spike from a test of 126 head of the data back to that next line in the sand we talked about earlier as well, 126.50, and then above that is Monday's high, which is 126.70 zone. So it's a weaker dollar on the data, ladies and gentlemen. That headline is what's going to really move things. Gold should have perhaps broken that range. There we go. Gold broken its 2032 as we suggested it may, in a waiting zone, and 2031. Let's have a look at that. Yeah, so again, it's buys a bit to the upside. That 50-hour provides support. So buyers down here, we moved lower. So through the 2032 level. We're waiting ahead of the data, so broke the 2038 pre-market high, or pre-European market high, and we trade at 2041. So that then brings in, if we can hold this 2040 level, it then brings in the 2050 level, obviously. So gold jumping to the upside. There we go. Just exaggerate down that 5-minute time frame. So it's a weaker dollar on weaker inflation. As we go, gold, euro, Maggie, touch on, yeah, euro pound. It's funny, I was talking to my colleagues about this earlier. Where's it gone? Where's euro pound gone? Where's my euro pound gone? Where's euro pound? What's my euro pound? Oh, go back to my euro profile. Euro pound. There we are. Euro pound. It's been, it's descending nicely. It's under 87. Yesterday we went to 86, 86 whatever it was this morning. 86. What's that? 86.70 this morning. Just we're doing that in. Just a few weeks ago, there we go. 88.70. 3 days last week. We tested it once, twice, 3 times. Triple top. Here, the blue line here is, I think it's 21 EMA. On this 1 hour time frame, so that was short then. A couple of days rallied back to 88.30 earlier in the week, earlier last week, but we've been a leg down since then. So what was that, Thursday, Friday, Monday, Tuesday particularly moved down yesterday, and again are down today. So again, trail your stop round about that 21 EMA at 86, 87. Maggie, I hope you've been trending this lower, and it continues to track low. That's the 1 hour, the 4 hour, more of an exaggerated move from the breach of 88. There's that 88.70 level we couldn't get to the week before last. Couldn't hold 88. We're under 87 now and continue to move lower, flattening out MACD, but still perhaps some more legs in that. This move is over. The stochastic, the 10.63 second stochastics being oversold. All this move down, so keep that on your side. 87 is the breach to the upside. Juju, what's CPT? What time your lens? I don't know. Off before quotes? Yeah, we'll get off before, absolutely. Michael, we just looked at dollar yen, I hope. Are we finished? Anybody over on go to webinar? Got anything else we want to have a look at before we wrap it up? Because I'm really run out of steam now. I'll be doing it an hour and a half. It's too long. So let me just finish. So euro pound down, euro dollar reversing the other way. Big candle here as the inflation in the US is coming weaker than expected. That's good. Good for the Doves. The Fed may be done. Likelihood of 25 basis points. I don't know what the Fed funds futures are. I can't get to it from this terminal, but spike up here on the hourly chart. So that will rekindle our daily chart here. So although we moved under the 20-day moving average ahead of the CPI yesterday, it might be just a 1 day reversal of this uptrend. So will we get back over the 20-day moving average? The 20-day moving average and the middle line of the Bollinger Band sits at 109.97, so 110. It's not marked on this chart, but 110 is key, and it's been a pivot for a while now in the second half of April, beginning of May. So 110 for euro is the next upside target following the inflation data. But see how the Bank of England move markets tomorrow. So if there's no more requests, remember markets open, US markets open in another hour's time, but that was the event of the week really. Let me just put that back on for you. Where's my calendar gone? I've lost my calendar. Where is it? There it is. So just a quick recap. The thing that will be grabbing the headlines on no doubt on CNBC and Bloomberg is this headline: inflation under 5%, 4.9%, one tick lower than expected. So it's cooling, and the core remains at 5.5%. So there's still some stickiness in that, although it's come down again, also come down a tick. As expected, but it's a weaker dollar on the immediate reaction. We're only 10 minutes in to the data. Is a weaker dollar, as you can see here. Let's put that. This is the euro on 5 minutes. So that's our 5 minute candles for the euro dollar, bouncing from 109.50, a breach under 109.50. And we currently trade at 109.99, so we're back to test the key 110 level. Watch that on an end of day basis. Are we going to get back over the 20-day moving average and back into the 110 zone for euro dollar traders? So if there's no more requests, I'm going to wrap this up. Michael, we did look at pound yen, didn't we? Yeah. I'll leave you with the euro. We obviously still got some more webinars this week. Tomorrow, Otto will be talking about swing trading versus day trading, so intraday trading versus pivot trading, pivot points and swing trading turns in the market. So join Otto for that tomorrow. On Tuesday next week, I'll be looking at the daily options expiry. If you don't know what options are, or the daily options that expire, particularly in the US, 10 o'clock New York time, can have a key influence on levels, support levels, resistance levels, certainly on an intraday basis. So it's free. It's information that's published every day, every week. You can plan your day around the options expiry time, and I know lots of traders that just trade those time frames and those key levels if there's some big volumes expiring. So more on that next Tuesday. Every Wednesday, remember, is this what we've just done today, live analysis. Market Basics 1 with Andrea. Market Basics 2 the following week, a week on Wednesday. Stochastic, which you see on a couple of the charts I've shown today. It's a key oscillator, it's a very popular oscillator. What are the best settings for the stochastic is one of the things we get asked all the time. Join Otto on the 18th for more on that. And MACD, another very, very powerful and very popular indicator with Andrea to close out the month. So take care, everyone. Thank you for your time. If there's no more questions from anybody, I will leave you in peace, having run way over time. Nobody on GoToWebinar, so I assume there's not many of you left over there. So I assume that's all done. Let me just check our YouTube friends, and they've all gone as well. Okay, right. Take care, everyone. Stay safe, and we'll see you all again next time. All the best, everyone.